All right, everybody. Good afternoon. Good afternoon, Europe. Good morning, America. Good evening, Asia. Africa, South America. Hope you're there too. Hope everybody's doing very well this Friday, wherever you are. Had a good episode with Danny this morning from WBD. It's been a while since I chatted with him, so I think that will air on Monday. A little bit about the price dynamics, more about the power curve, where Bitcoin sits relative to TradFi. But I wonder, I can only go for about an hour today, guys. So, let me hear your thoughts. Let's go right into the analysis, as usual. Getting pretty soft, right? People getting worried? That's the number I just pulled in. 100,221. James Checkmatey said yesterday 95K is his number. Showed a lot of cohorts that bought above that level. But this time is clearly different. I mean, it's clearly different. I think we could bounce down to 70, come back. I also think we could go higher right now. What do y'all think? It's kind of fun if you're not really searching for liquidity short term. Three nice passes at the trend line over the last 2 years. You guys worried? Let me check something really quick. I'll come back in a second. The gold chart as well continues to be more intriguing. Bitcoin cheaper in terms of gold. And I do wonder how low this one can go. So if we pull this one up, all right, still every time we got above the 9, nowhere near the 9. In fact, we haven't even hit the trend, all right, during these 3 pushes. As gold screams to all-time highs, although it's off its all-time high. Look at this here. We're now below the 2. Meaning 80% of the time, based on this power trend, which is the 95% R squared, Bitcoin is more expensive relative to the power trend. It's 25 ounces of gold at the moment will buy you 1 Bitcoin. And I'm very curious how low this one goes. Anything can happen. It can go to 1, the 1 on here, which is 10%, which is 22 ounces of gold. But when you bear in mind that only 3 years ago, 1 Bitcoin was 9 ounces of gold, one has to ask, is it really going to go much lower? Is gold really on some new perma bull trend relative to Bitcoin? What do y'all think? It's typically quite bullish to buy at or below these levels. And remember, we hit 1-to-1 back here, all the way back here in 2017. All right, and the trend itself increases. Let's look at that 64 now, November 10th, right? 64, the power curve. When does that 64 turn to 65? 15 days or less. 15 days. So every 2 weeks, Bitcoin on a curve should be getting 1 more ounce expensive in terms of gold. But it is not at the moment. It is quite cheap. So do the gold bugs take some of their gains and go back into Bitcoin? I'm back. We have this one. Supply and profit, supply and loss. All right. So you can see that every time we've had those 3 bumps, obviously nearly all the supply is in profit, like 100%, almost 100% of it. And then when we have these dips, it goes to, 25%, right? Roughly 5 in total of 20. 5 out of 20. 25%. Did I say 20? 25%. And that's where we are today. So is this just another one of these dips, or is it full on bear where this goes up to, 50% in loss? To me, it's most emblematic of 2017. Right, the percentages are different. But you get these little bumps as we climb the wall of worry, and then they come back down as we basically get to all-time highs. Right, these red bumps come back down, and again, nearly all the coins are in profit. I know that this time is different. It's always different. But this has been almost like 2 years of this, which was 1 year. The real movement started as we got back up to $1,000 in 2017. So, what do you guys think? Some Malox moments. Whoop. And now we're below it. Should I update my percentiles? Was it 99.1? Would be the last level here. I'm not a TA guy. I'm just saying what was some kind of support here. I want to bring attention to the tweet I did yesterday on the money supply. Pull it up here. Oh, whoops. Wait, is that off the window? Hold on. There we go. So roughly a doubling of the U.S. money supply in 10 years means a 7.2%, rule of 72, 7.2% CAGR. A little bit less, in fact, because it's 22 trillion here, 40.3 trillion here. The one that should stand out to you is the demand deposits. People got a lot of cash relative to before. Three times as much. That is in their checking account. Primarily because of the 2020 period. All right. But everything else mostly, is going to double. Savings deposits have not doubled, but demand deposits have tripled. So that's kind of how it's all shaking itself out. But I think it's important to look at these, not necessarily because it's what Bitcoin, it's obvious that any amount of this liquidity could go into Bitcoin at any time, and it will. Compare Bitcoin's growth over 10 years. Right? Didn't even say it. 2.1 trillion versus 4 billion in market cap in 2015. But as long as the trends stay relatively constant, and they'll probably even increase, that is, grow a little bit faster. Bitcoin's going to have a while before we reach full dominance, full saturation of the money supply. One thing this chart doesn't have is euro dollars. That is offshore dollars. It's very hard to estimate. The Fed stopped publishing M3 in February 2006. Eurodollars was a component of M3, but they probably stopped publishing it because they lost track of Eurodollars. They couldn't keep a good count on it. No, not really anybody has a good count on it. This is dollars that's in a Japanese bank account, or dollars that's in a Belgian bank account, or Latin American bank account. It could be 10 trillion, that money supply. It could be 30 trillion. I've heard even higher numbers. I don't think you're going to get over that, because, in fact, I would doubt even 30 trillion. Numbers like the Paradise Papers, Panama Papers, those were around the realm of 30 trillion. But again, that's not just people with dollar bank accounts in the Cayman. Those are people holding U.S. Treasury bonds that are just offshore. So that's not technically a Eurodollar. That's just an investment in treasuries. But there certainly are dollar denominated deposits that would count as money in that group. So it's very hard to estimate. Another interesting thing is notice this cash in circulation. Right? And so cash in circulation, which is cash outside of banks, that's cash inside banks is this measly 85 billion. So cash in circulation plus demand deposits, that equals your M1, right? So M1 money. But notice how, if you can kind of tell, these bars here, they overlap. It's the only one that overlaps between the different money supplies, M2, M3, M1. Because cash in circulation is both part of M1. It's actually M0, it's cash in circulation. And it's also part of the monetary base, which is the printing press of the Federal Reserve. So 3.57 trillion plus 2.306 trillion plus 85 billion, right? A little over 5.65, 5.7, I guess, actually, as of June, monetary base. You count up these three things. That's really the money supply that's most economically equivalent to Bitcoin. So we have some time to get there, but Bitcoin's very close to this number, which is the actual physical cash outside of bank vaults. Sorry, 1 second. Good morning, NYC Huddle. Yeah, opium's never going to get you there. I think one of the best things that James said on the stream yesterday was you have to envision what you're going to do if it goes to 80K. Envision what you're going to do if it goes to 120K. Thank you. Yeah, I think he's one of the best as far as checking on chain. Really, really solid research. Everybody knows Wall Street has arrived, right? I mean, but doesn't mean Bitcoin's doomed to follow the Wall Street vault, at least as of yet. We'll have to see how this goes. But if we go back to this chart, pull that out to December. Trend 125, as it's been for a while now, hasn't moved too much in the last year, right? Because it can move up or down. It does move up or down every day based on new data. But 125K, if we fall to the 60th, which we're below right now, that's 119. If we fall to the 50th, that's 96th. We're not there yet at the moment. 97K. We fall to the 40th, that's 80K. We have not fallen to the 4 in quite a while. All right. Doesn't mean this is not a TA chart. I'm just showing you the risk. It's possible that this level is not a support at all and it breaks. Who's nervous? That's funny. That's funny. Yeah, it was enjoyable. Good team, actually. We've chatted a lot offline, and we just never got around to doing a stream, and I'm hoping we could do more. Another thing I talked to Danny about, which I talked a lot about here, but I'm still curious what you guys think, is in reality how far you think this market cap of gold could go. And I'm going to put the market cap instead of the price because it just makes more sense. So remember, I had the long and the short percentile here. It's going all the way back to 1971. Market cap 7.1% CAGR. What that is actually the price times the inflation rate in ounces of gold. So the price is like 5.5%, 5.4, 5.3. You add in the 1.8% of new ounces a year, you'll get to this CAGR, which is the market cap CAGR. Anyway, doubles every 10 years, okay? Very similar to the money supply, in fact. How close are we to the extremes, like taking this off the chart? Well, we'd have to get to a $28 trillion market cap. We're at about a 24 at the moment. Good afternoon, Nancy. Thanks. Yeah, I think we'll try to do it. But I'm just trying to figure out when this curve turns around. Because Peter Schiff is just loving his life right now. I don't follow him, by the way. I'm just imagining his whatever nonsense he's spewing. It's totally possible we go another year at these rates. 42% per year. Okay. But we still have this supply and demand function of gold. The Bitcoin is not constrained by. Where more higher price equals more producers coming in to take advantage of that price. More producers coming to take advantage of that price will probably bring in a lot of jokers too. A lot of projects that even now might seem kind of good. Well, maybe these people don't know what they're doing. Or even if they do, they could go for a couple months, a year or two, but at some point, you're going to revert. And then the cure for high prices is high prices. You have enough producers producing the same amount of gold. People start asking, why am I paying so much for this gold? Price comes down. Good morning, BTC Moon Guy. So that's my thesis on the gold trend. Another thing is this 42% CAGR is just so insane. I mean, like the numbers just get insane. All right, so let's just look again before we look at this craziness. Even back in 2011, we got to maybe 8 trillion. That was too much for the market. Went back down to 5. Now we're up to 23 trillion in all gold and silver, or sorry, all gold jewelry, bullion, outstanding. Let's even follow the high line here just to make it really absurd. Oh no, this is the current trend. That's actually going to be better. Let's put the short trend. So the short trend will pass, like you saw here, 30 trillion. This is possible. But at 40% CAGR, you're at 60 trillion by 2028, 100 trillion by 2030. These are like Bitcoin numbers. And let's just show you where's 2035? Yeah, already 200 trillion by 2032. And if we take it to the 2035, $700 trillion. I don't think the gold market's going to go to $700 trillion by 2035, no matter what Peter Schiff says. It's going to come off that, revert to the mean. But I think this could go on a lot longer. And if it does, how low does this one go? Theoretically, it would be very difficult to get under 23 ounces of gold per one Bitcoin. The price right now is 25 and a half or 25 and counting and going lower. I have a hard time seeing it's going to go to 10, which, by the way, was only in 2022. Shows you how strong Bitcoin has generally been growing against gold. Someone told me Nouriel Roubini had another RIP Bitcoin moment. I haven't read it. Yet another joker. No, this is not recent. Here's from Saifedean back in July. And it might even be more expensive than July. No. Right. So it is down. It is down from July. So in July, when Nouriel was again saying Bitcoin's going to zero, the price has gone down from 35 ounces to 25 ounces of gold per one Bitcoin. If you're a gold bug that also likes Bitcoin, at some point you're going to have to start wondering, how cheap is cheap enough. And maybe they wait. I mean, maybe this is not the bottom. If Bitcoin goes to 80K, gold goes back up to 4.5. That's not the bottom. What is that, by the way? 17. Bitcoin goes to 80K. Gold goes up to 4.5. That's 17.8 ounces of gold. That'd be below the 1. I can see that happening. The question is how long it stays there, if it gets there. Anybody worried? Is gold gonna return to global reserve currency status? How long does this trade last? It could go quite a while. This is top 8 tech stocks in the U.S. Shown this a few times. Thank you, Shifu. Yeah, it could go there. It could. As I just said before you commented, 80K BTC and gold going up to 4.5K, 17 ounces and change. 17 ounces of gold per one Bitcoin. That's pretty cheap historically. Historically, as in the trend, which goes up an ounce every 2 weeks and is a 95% R squared. And I've grounded a lot of my reality in this trend. Doesn't mean it's always going to be right, but this one is remains wild. Even if we just leave the processing companies, which are just these two. You can see the chip manufacturers just explode from the launch of GPT. Does anyone else think that GPT kind of sucks now? Takes forever. I mean, I know it's been through a lot of iterations, but so the trend line here is also 40%. You do a trend line through it, which I can show you. If you do a straight line all the way through here, this red line, 40% per year since the launch of GPT. Same as the Peter Schiff trend, which would be here, which he would love. I don't have all the answers, but it does seem that gold and tech are very much in favor. And I liked that James was leaning towards saying it kind of looks like a dip. I wonder what he would say today. One day changes a lot. It's hard for me to not think that this is just a new game with Wall Street front running. My buddy Kane has been talking about that. I was on his show a while back. Wall Street knows about the power curve. They know the trend line by now. So if they can get some weak hands to exit here, or at 90 or at 80, they're going to do that. Let me show you. I don't have all the detail that James has, but I can still show a couple of short-term and long-term realized profit. One second. So major capitulation in dollar terms in 2022 reached 24 billion. I think June of 2022, wasn't that when FTX bought who did they buy? They bought all these failing companies with no money. 25 billion as this price was coming down. The biggest realized losses on it, this is a trailing 30 days. Been 15 billion here, and now we're moving up probably to match this. But in absolute dollar terms, we haven't even met, the loss taking that occurred in 2022. 3 times. All 3 times has been lower. I'm not saying this time couldn't be the worst, but it's hard for me to believe this is anything like a top. Let me show you my PSR, price to sales ratio. PSR actually has lots of support, in my view. Give me a second. All right, so again, this is just a multiple of market cap divided by what miners make on a trailing 12-month basis. Very smooth on the denominator. There's price. All right, usually we have major peaks with this. Kind of looks like the MVRV trend. Mine's a little bit different. Here, again, been pretty smooth. Pretty smooth last couple years. And no major peaks. Let's put the price on. I already forgot. When was the top? It's here. Was it October or August when we actually closed the day on the top? Here, probably, right? 123,443. 124. It's October. That's too close. Doesn't seem like a blow off. Definitely can go down. It's definitely looking down right now. So I get what you're saying, Huddle, about a lot of fear and crying on Twitter right now, but Wall Street's got to be hunting for liquidity. Yeah. Good morning, Slonic. Yep. We thought it would be easy, right? I was probably even talking it too easy back in the day when I'm saying, like, oh, you just wait till it gets above the 9, maybe lighten it up. This has been a whole different wall of worry. We were almost spoiled, right? Look at that. Look at how spoiled we were. It took us from trough to peak here. Yeah, I mean, call it March 2020 to really January or March. Yeah, it took a year or less, right? In 2020 into 2021. And here as well, it took, well, from the absolute trough, it took 2 years, but um, actually, no, depending on where you measure it. But when we got over the trend, it's pretty quick before it blows off. Pretty quick. So it's probably fair to say that, and the same thing in 2013, obviously, like once you get that momentum, you didn't have to wait long to get above the 9. Nothing like that this cycle. Just grinding up the wall of worry. I had some people telling me that this could be the first time where we go into a bear with no validating on-chain data. That seems hard for me to believe. Anything is possible, but and Wall Street is involved here, but I mean, just look at these. Look at these fees. Like, we always get a spike in fees. Sorry. Always get a spike in fees. It's 30-day rolling fees. Let me take daily off. 250 million. Not much. It's pennies compared to the gold market, by the way. 340 million. This was the highest day in fees, was right here. Right there. 78 million in one day. And now, absolutely no fees. This would, I have to say, this would surprise me. If we slip into some sort of a bear, again, all the talking points you all know, I'm sure, watching this video. We haven't had the boom, so if we have the bust with no boom, seems kind of weird. But literally no fees, no congestion. Then that would be a Wall Street, I don't know, a Wall Street moment. Because clearly Wall Street would be controlling that price more than retail at that point. Do I think that that's going to happen? No, but it could. It's pretty wild to look back here. $500,000, 30-day fee for miner in relative dollar terms at the time. 500,000 over 30 days. And even now, this is super small, right? So like over 30 days now, 10 million in fees. The gold market, again, we don't have like really fees for mining. I mean, you can just count the margin of miners or whatever, but the gold market is a $400 billion market. And you add in the block reward here. On top of these small fees, you're getting to 17, 18 billion. It's not much. But James had good advice. Envision what you're going to do if we go down. me show you another one relative to the power curve. I haven't shown this in a few weeks. I have about 10 more minutes, by the way, but I'm going to record another show. Come on. What are you doing? Let's check back in the live price. We did it. Back above 100. Give me a second. This is not. Sorry for the dead time. 1 second. Pulling up a couple more, then I'm going to have to cut it after about 10 minutes. But what's going on here? So slow to load. You all remembering that Plan B gave $1 million prediction by the end of the year? Sorry. I promise it's coming. All right. So Plan B's models were using exponential coefficients like gold and silver, and they actually came closer to an exponential trend for Bitcoin. Notice how his 2020 model would be $6 million Bitcoin at the moment. Would be great, but it's not very realistic. So that's gone. The 2019 model is where he's holding on to this $1 million prediction. It's hard to see how far this is apart on log scale. You have to actually look at it. But something tells me we're on the right track with the power curve. Scale invariant, proportionally tracking Bitcoin as it gets bigger. Danny asked me this morning if Bitcoin went into an exponential, a straight line on log scale, like this. This is the all-time. This is a shoehorned exponential curve. It's obviously Bitcoin's not on this curve. Number one, it's clearly, it would be, similar 600, 700,000 right now if it was growing exponentially. It's not. But maybe at some point, if it's not exactly the future we want, but if Wall Street takes over, withdrawals are canceled from every major endpoint, they still let us hold Bitcoin, but it's not real Bitcoin. It's possible the price could even look better in this case, but it would just match a ever depreciating fiat system. So it might look something like that. And people would actually say, oh, that looks better. That's cool. But again, here, when I see exponential curves, I'm just seeing a lot of risk, a lot of fiat interest, a lot of unsustainable growth compared to the nice power curve, which is very sustainable and is how networks grow. So that's going to be, Danny sort of asked me, which one do I think is more likely? And I'd say between the short term and the long term, it's hard to see, but a lot of people said at the beginning of the Trump term, the nation state level threat to Bitcoin is over. Not sure about that. And Danny brought up this show with Thomas Pacchia, which I did see actually. One of the I don't catch all of Danny's good pods, but Bitcoiners might get the numbers that they like, but the future that they don't. If Bitcoin turns exponential, it actually is not a good sign because that's mirroring the rest of the pyramiding fiat interest. Might be good for hodlers today, but straight lines on log scale are less sustainable. Anyway, that's my rant. I don't think we're forgetting it. It's a good question, Erickson. I mean, it's definitely here. Everybody can. I'm sorry, I'm off this. Everybody can see that it happened from here. I'm sticking with what I've been saying. I'm not calling the 4-year cycle dead until it's truly dead, until we're really past it. We've been, like I said, blessed to have these major run-ups, either at or below trend. It takes a couple months to get above the 9, right? So here, once we got to the trend, it took 6 months, and we blew it off. Same here. Actually, I had the double top in 2013. Similar to 2021, but the true top was here. We didn't have to wait long. Here, like you said, it's absolutely true. It's different. It's different this time. We hit trend all the way back in March, a year and a half ago, 2024, still on that trend line. To me, if it's March 2026 and we're still around the trend line, then the 4-year cycle is for sure dead, if not a 4-year cycle anymore. Maybe a 5-year cycle. Maybe the cycles are dead. But let's see what happens in December. Wall Street knows about the 4-year cycles. We'll see. I'm going to have to leave it there, guys. Thank you for tuning in. Thank you for watching, as always. Let me know if any questions, comments, you know, you can throw a couple sats my way. One base money or basemoney.org, basemoney.com or .org, I think both. Porkopolis.io, BTC Pay servers there. Like I said, show with Danny is coming on Monday, so you can check that out. We talked about some of these topics and more. Happy Friday, everybody, wherever you are in the world. Thanks for watching. Have a good weekend.